2019 is here, and most investors have their market resolutions ready for the new year. As a financial journalist, I also have some resolutions. I'm looking for more market stability and less volatility going into the new year. Here are what my colleagues at TheStreet are looking for in the new year.
So the back half of 2018 was completely racked by the trade war between the US and China. I'm hoping that in 2019 we can come to a resolution, and certainly shareholders of companies in the semiconductor sector or even in smartphones or products that are made in China will certainly be hoping the same.
FAANG stocks for the last several years have dominated the tech sector as well as the markets as a whole, but they're starting to outlast their sort of usefulness as a grouping, as different factors drive each company's performance. In 2019, I'd like to see a little bit more breadth to tech investors' interests in stocks beyond just the FAANG stocks.
In 2018, we had the big deal. The big deal there was Campbell's Soup and Dan Loeb. What was the big deal going to be in 2019? Well, it's kind of hard to tell now, but I'll take a bit of a flyer and say I'd look for something in the automobile sector. The automobile sector in the U.S. is reshaping itself. There are a lot of assets that are going to have to be disposed of. We've got Elliott involved with Hyundai overseas. So I think we need to keep an eye on the auto sector. Mary Barra, something of a lightning rod herself.
2018 is coming to an end. It's the worst year in the market since the end of the Great Recession in 2008. That's a 10-year low. Still, 2019 will probably be better. The unemployment rate is still going down and job growth remains at a healthy pace. And retailers did well over the Christmas period, and it looks like consumers are in the mood to spend.
In 2018, in both M&A and private equity, we saw a story of two halves. I think in 2019, the private equity market, at least initially, stays fairly cool. I think for strategic M&A as well, there are challenges, including a decline in equity values, which make targets less likely to transact, and a general sense of uncertainty that permeates boards' willingness to consider company-altering transactions on both the buy and the sell side.
So it's not going to be quite as bad next year, but there are signs the economy may slow more than expected, depressing the outlook for future profits.